Greetings. My name is Patrick Donohue, founder of DealPen, a professional capital markets advisory firm. On today's video cast, we are discussing a capital markets update and what DealPen is here about in the marketplace. In particular, on private transactions. We are based in Minneapolis, and sourcing private capital in the Midwest is still extremely difficult. In meeting with an investment banker today, he's pretty much said that over the last 18 months, they have quit working on any private transactions for private companies because sourcing those investment dollars is exceptionally difficult today. The deals that I'm personally seeing completed in our backyard, the Midwest, are deals that strategic investors are interested in. I made a similar statement to this in a video cast several months ago, and the same is true today. I'm familiar with a company in Iowa that raised a few $1,000,000, and it looked like it was venture-based and financially interested investors, but as you peel back the onion and you look at who these entities were, they were truly interested in having board seats because they had a strategic interest in the outcome of the company. So point being, we're not seeing a lot of investment activity where people are simply only acting as a financially interested party, where they're literally writing a check, handing it over, saying best wishes, let me know when you hit the home run and I can cash an even bigger check. That is very rare today. Most investments that are happening in and around, especially earlier stage or smaller private equity deals, are for strategic reasons. On the East Coast, and I've been hearing a little bit, or excuse me, on the West Coast, and a little bit I've been hearing about on the East Coast as well, earlier stage private equity, especially venture-based companies, has been very hot. And this is because there's a lot of excitement and buzz about the valuation of Facebook, Twitter, LinkedIn, that's probably going to be going public here in the coming months. And so there's a lot of exuberance about some of these companies that were essentially birthed out of very lean operations. And so you'll hear a lot about lean startups, which is an important buzzword today, because a lot of the startups that are getting going today are trying to demonstrate a need in the marketplace as quickly as possible. They're not getting the $20, $40 million go figure it out today that may have been happening in the late 90s. The deals that are getting today will be done a little bit thinner, and more importantly, it's going to be more milestone based. So that's where you may hear in the marketplace where venture capitalists are more interested in later stage deals, and that's as true as ever today. The angels groups are very active with funding earlier stage companies, but that's where they're literally putting a few $100,000 or a couple $1,000,000 to work. If the venture capitalists or the larger pools of money are going to work, they are later stage where they've demonstrated traction and a need in the marketplace. The other capital markets update that we have for you is in the general section of IPOs. We host two forums on LinkedIn, the Capital Formation Forum and the Growth Strategy Forum. And both of these forums, we post insights when we see articles of interest and what's going on, trends in the capital markets. And in particular, I posted 3 articles yesterday, which is the most I've posted in a long time, about the IPO market. And the IPO market in the United States has been declining since 1997. There's several reasons for that. I would encourage you to go to the LinkedIn group Capital Formation Forum and look at the articles that we've posted. Grant Thornton in particular had a couple of partners testify to Congress the other day about some of the reasoning of the decline in US IPOs. What is interesting, and maybe no surprise, but IPOs in the rest of the world are doing well and even growing, especially in the Asian markets. The Asian markets have been flush with capital, and especially capital that's higher risk capital, where they're willing to make a bet on things that can go big. I would encourage you to take a look at the trends in the IPO market because it may be an overused phrase, but it truly does have a trickle-down effect. if the IPO market is not vibrant in the United States, that's causing substantial heartaches in other capital formation activities, and for simple reason. If people aren't getting liquid on investments that they've made in the past, they don't have the capital available to put towards new deals, and they're also a bit more skeptical that they're going to have a decent turnaround time on future investments. And that's a huge issue in the United States. And there's a lot of discussion and some differing opinions about that, but that's the core issue today. And that once again, yesterday, for some reason, there was 3 or 4 articles just on this topic alone. Thank you for logging into our video series where we can provide quick glimpses into the capital markets. Please follow us at DealPen.com, DealPen.com. And if you click on the Trends tab, that is where we host our blog and provide free resources for people to get insights on the capital markets. Thank you for logging in, and we look forward to the opportunity to potentially meeting in person someday.